All right, good morning, Checkmate crew. It's 15 minutes after the opening bell of the New York Stock Exchange. It is Wednesday, May 17th, 2023. Mickey Blindside here. So let's go over what's going on. Okay, so the thing that I noticed today the most was the dollar. The dollar is looking like it's making higher highs soon. So this is actually, I think this is it's not quite there yet, but it does look like as if we might be getting a short squeeze in the dollar soon, especially if we start seeing rates go up. We're actually seeing the front end of the yield curve move up quite quickly. Let me actually get those charts. So yeah, we're seeing the front end of the yield curve. So that's the 1 years. The 1 year. So the 1 year is going up. If we see that it gets back to the pre-SVB banking crisis levels, all right, we could see the demand for dollars go up. That's the 1 year, the 3 month. What is it on TradingView? 0.3 3 month. Yeah, there we go. So that's the 3 month bond yield. It's at 5.09%. So as this keeps going up and up, and there's going to be a dash for cash, we might be seeing that too. ZF, remember ZF? We used to use ZF as a dash for cash indicator. All right. I think if it breaks down and goes for a lower low, that might also prompt people to go after some dollars. Let's see the USD INR. That one is also, it's also curling up as well too. So then not only is there going to be domestic demand for dollars, you'll see demand for dollars overseas in emerging markets as well too. And so if the dollar goes up because of that, we could see some volatility, especially in the stock market. I wouldn't. I'd invite that. It would be nice to get a little bit more volatility so we can play some swings, but not yet. I think the bigger moves are ahead when we see the debt ceiling actually get passed. And once that debt ceiling gets passed, again, the thesis here is that all the long-term bond issues that the Treasury could not do, they're going to be able to do once the debt ceiling gets passed. And so we might see the 10-year Treasury yield really spike at that point. And that might, compress valuations. So we might see, especially the tech sector, have a meaningful correction if that's the case. And that's the play that I'm looking for. And right now here, as we can see here, the daily chart, it does look like we might be venturing into some higher highs, higher lows. Let's actually go with the line chart. It's easier to see with the line chart. Yeah, so, as we can see here, for the last few weeks, it's been in this range. And we're finally starting to get into the upper bounds of that range. I think this could, if it were to squeeze, okay, it can squeeze all the way up to like the 105, 106 zone. Okay. And then I think it just chops around for the rest of the year. And around June, July, that's probably when we're going to continue this mini bull market. And then as inflation picks up, the next wave of inflation, again, I think it's going to come from the crops sector. then we might see the US dollar go up with the expectation that interest rates will be meaningfully higher next year. So people think that we were at the highs, but I mean, if you actually take a look at the monthly charts, we were higher back in 2000 and also in the 70s and 80s. We were much higher. So this has room to run. You know, if inflation really picks up next year, if, you know, that's a big if, but if it does, the dollar has some more room to run, really. But I'll also believe it when I see it. Let's just take it one day at a time. So that's that. Oil's also up today. Even though the dollar's up, oil's up. It looks like oil's up, but some of the soft commodities are down, like some of the crops. Corn is coming down. That's no good. Wheat and soybean futures. Gold. I know a lot of people are asking about gold. I've got multiple questions about gold. Gold. I mean, you would if the dollar is to go up, you know, we can expect weakness from gold. We might see it come down a little bit. Okay, if the dollar goes up. Silver is still somewhat strong. Actually, platinum has been very strong, even with the with gold coming down this much. Platinum has still stayed relatively strong compared to the other metals, but unfortunately there's not a very good play for platinum as far as stocks is concerned. I don't really have a stock that meets all the criteria of what I'm looking for, so that's hard to play. Yeah. So okay. So that's the bond market and interest rates and metals. What else? Let's take a look at OPEX positioning. If we're looking at VIX and everything, so VIX has been relatively low. I mean, right now, I mean the relative ranges of what we're looking at on the SPX is quite low as well too. We're not seeing that much of volatility. I mean, look at price range. I mean, it's just been pretty much stuck around this like 4100, a little bit over 4100 to 4150 zone. I just don't see this breaking until OPEX is the OPEX effect, the options expiration effect is over, which, you know, today is Wednesday. So probably today and for maybe opening of the market tomorrow, we might still be in this range, and afterwards we might bust out of this. You know, maybe we get some scare about the debt ceiling. Who knows what it could be? But I expect that next week we're probably gonna see bigger ranges forming next week, and so we might actually see the VIX go up next week, which would make premium selling a lot more favorable. We get a little bit more premium as the VIX goes up. So I don't mind. As a premium seller, net premium seller, that's actually good for me. So we'll see. The VIX, that's the VIX. The 9-day VIX is also somewhat lower. We're looking at 15. So, you know, generally, if we want to see the actual VIX 30-day make sustained moves to the upside, we usually see it in the shorter VIX. You know, we usually see it on the shorter time scale VIX also make sustained moves. Usually it happens first on the VIX 9-day or the 1-day first, and then we start seeing it in the VIX 30-day. So we haven't seen any of that yet. All right. Crypto markets, you know, I did a little bit of digging in the crypto markets, and I'm not really seeing that big of any that large of an options orders on a day-to-day basis. On a day-to-day basis, it doesn't necessarily always give you hints as to what the market will do. However, I will say this, that right now we're seeing the implied volatility go up a bit, even though the actual realized volatility is still quite low. So for the most part, for last year, we actually saw that crypto was making larger moves than what was implied. But for the past week or so, that has not been the case. We've actually been seeing implied volatility actually a little bit higher, actually, at least for the past few sessions. All right, and this is something that I noticed here. So we're seeing actually for the individual orders or the regular trades, we're actually seeing more calls getting sold because of that. I think there's a lot of premium harvesting happening, especially in Bitcoin. That's the only thing that I really notice. So we're seeing calls getting sold. A lot more of the call activity is shifting toward the summer expirations, so June and July, especially in Bitcoin. We'll see. We'll see what happens. All right. Rates, nothing has moved that much in the CME futures. So I don't really see much of a change yet. I think it's because of OPEX week. I think I think OPEX is going to have to go and pass before anything happens in the market. So most likely next week we'll be seeing the bigger moves, even though the dollar is doing this. I mean, with the dollar doing this, I would have expected the market to have had a little bit more of a negative effect. Although if you actually look at our internal data, I haven't posted this up yet, but our junk bonds advanced decline line actually did drop a fair amount yesterday. So liquidity conditions are worsening. And with the dollar going up like this, and then OPEX ending this week, next week we might be seeing the bigger moves that we've been anticipating. And I think the biggest of those moves will happen after the debt ceiling gets passed, and that I think is going to happen within the next 2 weeks. All right. So that's all I had for today. Any questions? Any comments? Anything you would like to see? And tomorrow, I said yesterday that I was going to go over our individual stock holdings. I will go over that more tomorrow. I just needed to do a little bit more digging on a few of the holdings that we have, and look at some of the recent earnings reports that came out. So I just need another day to do a little bit more fact finding. So tomorrow I'll do more of the deep dive into all the individual stocks that we have. Okay, well, in that case, then let's go ahead and wrap this up. So that wraps up our market memo. Our Discord invitation link is in the video description below. Come join our Discord, be a part of our growing community. There's no sub fees, no paywalls. It's of the people, by the people, for the people. And if you enjoyed our video, hit like, follow, subscribe, comment. Show some love, baby. All right, so tomorrow, 15 minutes after the opening bell in New York Stock Exchange, I'll be back on, and we'll talk about those individual stocks. Hopefully, we'll have a little bit more of a structured market memo tomorrow. Stay safe and trade well. Have a great day.